Hey guys, it's me Karthik Kantwalia from Apex Finserv, and we're back with the daily dose of watchlist for tomorrow's trading session. But as usual, before we begin, talking about the trades that we had discussed yesterday. So today, as far as the watch list is concerned, we had a red trading day. We had one target hit, and well, if I'm not wrong, we had one stop loss hit, and the other one closed in 1% red. So overall, it was about a percentage in red today for the watch list. And as far as the indexes go, as far as our personal trades go, we booked about 1000 pips on GBP INR and around 120 points on Bank Nifty. Now, before wasting further time as we are late today, let's move on to the trades that we have for tomorrow's trading session. Now, starting with the first one, SR Transfin, simply going with the very obvious lower low lower high structure, considering the recent swing high from the 29th or the 30th of July, considering that to be the highest swing point, and then the retracement and again the sell off that's coming on. We'll be going for a simple breakdown trade here. So we'll be going short under 665, stop loss going at 675, and the ideal targets being, well, as always, say 1% from your point of entry. Now coming on to the next one, Apollo Hospitals. Now Apollo Hospitals will be going for a short position here. Now if you look at these today's candles, if you look at the first two candles of today's trading session, now this is an hourly time frame, so you can give decent weightage toward individual candle size and individual candle body structure. So if you look at those first two candles, they are proper selling candles. Now we would like to take an aggressive short position at roughly 50% retracement of that entire selling move. It is a slightly heavily aggressive approach, but let's see how that goes for us. We'll be going for short positions at 1770, with the stop loss going close to the highest point of the nearest swing movement at 1790, and the ideal targets being 1% from your point of entry. Moving on to the third one, Just Dial. Now Just Dial, well, we had discussed that seemingly it had broken out of this range and it had sustained, but well, apparently that's not the case that's going on here. So we'll be going for a short here at the nearest available swing high point at 388, 389. There's also a supply zone at 387, 388, so that seems to be on our favor too. So we'll be going for a short position at 388, stop loss at 393, and the ideal targets being 1% as usual. Coming on to the next one, PL. Now PL, again we are going slightly aggressive here. If you look at the last four candles, they are proper accumulation candles with good. There was a bullish engulfing as well of the body, but the high was not broken. So we'll be going for a long position, aggressive long position once that high is broken comfortably. So we'll be going for longs above 1480, stop loss going at 1465, and the ideal targets being 1% as usual. Coming to the next one, IndusInd Bank. So we would like to go long at the closest pullback, or roughly the 30 to 40% pullback of this recent swing leg movement. So the idea on IndusInd is to go for a long position at 518, stop loss going at 512, and the targets being 1%. Coming to the next one, MFSL. Now MFSL, again it is a simple breakdown trade like the one that we had. I guess it was on SRT. So it's the same approach as that one. Go for a short, aggressive, slightly aggressively. It's not aggressive in this case, but slightly aggressively on the break of the immediate swing low. So we'll be going for a short position at 525. Ideal targets being 1%, and the stop loss going at 531. Coming on to the next one, Oro Pharma. Now Oro Pharma, we are going to go for a long position here. If you look at this movement here, if you consider this to be the swing leg, this to be the small retracement, and the last three candles to be a sort of continuation of the higher high higher low underlying major trend formation, you might also notice that there's a small bullish flag formation of a sort over here. So we would like to go for a long position once that is the high point of that corrective retracement is being taken out. So we would like to go for a long at not at above 960, stop loss going at 950, and the ideal targets being 1% as usual. Coming on to the final equity trade for the day, Bharat Forge. Well, Bharat Forge, we are going to go for a very conservative short position here at the nearest available supply zone, which happens to be at 425. So a very simple idea here, no rocket science on Bharat Forge. It's a short at 425, stop loss at 430, and the ideal targets at 1% from your point of entry. Now moving on to the indices. Now Nifty again, we have we are in a situation that on when it comes to the charts, we don't really have an immediate resistance level. If you would force me to plot a supply zone, I would say all right, there's something at 11,360, 11,370, but it's not a quality supply zone as I would consider. It's not something that I would consider or use as an entry trigger generator for well, it's just my personal idea, but that's not something I'm comfortable using. So the idea on Nifty right now is, as long as this level is being sustained, 11,300 is being sustained, or on the upside, 11,400 is being taken out, then you can keep an eye out for it reaching 11,500 as well. However, if 11,300 is being taken out, you have another immediate support just 25 points away at 11,275, beyond which you have another one at 11,200. So there's a lot of support for Nifty, immediate support available for Nifty. Now when we look at the option chain for levels of resistance, since we don't have any on the charts because it is at recent highs in the market, so we have immediate resistance at 11,400 with a hefty 1 million added contracts, important at 11,500 with 800,000 added contracts. So as I said, if 11,400 is broken on the upside, then 11,500 might be the next stop for Nifty. On the support side of things, we have 11,300 with 915,000 added contracts, and important support at 11,200 with 416,000 added contracts. Now let's see how it goes out. Both these levels of support are confluencing with demand zones that we have plotted on the chart. So personally, I would like to go for a long position on Nifty at every pullback. That seems to be the sensible idea as of now. But since the last 2 days, the movement in the indices, either be it Nifty or Bank Nifty, it has not been very confidence inspiring for either the buying side or the selling side. So let's see how that goes for tomorrow. I would suggest keep slightly smaller targets, keep your positions sizes slightly smaller until you have a clear bias or clear direction for Nifty or Bank Nifty, depending on what you're trading. Moving on to the next one, we have Bank Nifty. Now Bank Nifty is it's not the same case as in Nifty. We do have levels of resistance and supports or supply and demand zones here when we talk about Bank Nifty. Now we have immediate resistance at 22,300 as per the option chain with 155,000 added contracts, and that also coincides with the supply zone that we have at 22,300. For the significant resistance, it is again 22,500 with 167,000 added contracts, which also coincides with the supply zone at 22,500. So we have a pretty sweet short trade planned up for Bank Nifty, depending again on the candle confirmation that we get at that point of time. On the demand zone or side of things, we have a zone at 22,000 and the next one at 21,700. Whereas on the option chain, we have immediate support at 22,200 with 200,000 added contracts, and important support at 22,000, matching with our zone with 375,000 added contracts. Now for Bank Nifty, if you want to go for an aggressive positions, then you can go for a long position just above this zone, or if there's a strong breach of this zone, or if there's a good buying candle coming up from 22,200, because that is the support as per the option chain. If you want to go for conservative trades, then go long either about 22,300 or go long near 22,000, or with the stop loss going under about 150 points under that. So let's see how that pans out for tomorrow. As I always say, not as I said today, but as I always say for the indices, wait for at least 30 to 45 minutes of price action before jumping to conclusions, or aggressively jumping into positions just because you think it is going to go somewhere. Wait for confirmation from your charts before taking any trade, or that you might see, or any trade that you might hear somebody telling you. Alright, now this is all the charts that we had to discuss for you guys for today. These are the 8 equity trades from the watch list as well as the indices. Now as usual, if you want any of this content, if you want any or all of this content rather, you can always check out the Telegram channel at @ApexFinSer, the Instagram and the Twitter, all of which are in the description below. And I hope that you guys have a good green trading session tomorrow. Thank you so much for watching, guys. Have a good night. Bye.